Back, a bunch of stocks doing extremely well from the front line and which is supporting the Nifty at levels upwards of 17,950. We have a few of them. Reliance, the biggest weight on the index, had done well on Friday, was doing well all of last week and currently now has moved to the high point of trade. The other one we're looking at is HDFC Bank. That, of course, is the biggest weight on the Nifty Bank. Despite the underperformance on the Nifty Bank, HDFC Bank is the one which is actually outperforming currently at the high point of trade. This is HDFC Limited. HDFC Bank is the other one which is up 2%. The other couple of stocks which are up 2% each are both Bharti Airtel as well as L&T. Both of them report their numbers today. Also, fair weights on the index. That keeps the Nifty up by almost 1%. But the other stock, which is an unusual mover in today's trading session, and I call it unusual primarily because over the last few trading sessions, we've seen a sharp drubbing, but today it's made a bit of a comeback, and that's Nykaa. There are a couple of reasons for that. The first reason is that the company has gone ahead and shifted the record date for bonus issue from November 3rd to November 11th. What does this mean? That, the company was going to go 1:5x bonus, and as a result of which, the shares would optically look lower by about 20%. And a lot of people, benefit from that by selling the shares that they got into bonus, a phenomenon that's known as bonus stripping. It increases the supply on the counter. However, at a time where the company is already expecting some supply on the counter as the lock-in for pre-IPO shares opening on November 8 and 9, they've decided perhaps to, postpone it once all of this supply gets exhausted. Tomorrow, we have the second quarter results as well. So that is something we will monitor. But remember, this month itself, the stock is down 19%, 51% in 2022 so far. From highs, it's down 60%. So it's not been a good performer. So maybe at lower levels, some sort of bottom fishing might be taking place here as well.
All right, Mangalam, thanks a lot for getting us all of the details on Nykaa. But with that, let's move on and bring you a technical check on the market. Gaurav Ratnaparkhi of Sharekhan joins us for exactly that. Gaurav, good morning and thanks for joining us. It is a good-looking screen, whichever way you look at it. We're over 1% higher on the Nifty. We've, sustained after that gap-up opening. So would you take a call on the index level?
Yeah, good morning. So basically, what we are seeing in the Nifty is a range shift on the higher side. Till last week, 17,800, which is a 78.6% retracement of the entire September decline, that was acting as a resistance, and that had kept a cap on the higher side for the last week. But now today, with a gap-up opening, Nifty has surpassed that hurdle. Nevertheless, 18,000, 18,100 is the next barrier to watch out for, and we are expecting fresh round of selling to emerge from that zone of 18,000, 18,100. So limited upside potential is there in Nifty from current level. We are not expecting any runaway rally, but this is just a pullback to retest that barrier. So avoid aggressive long position at this point of time, especially for the index-specific trade. And one of the major contributing sector in terms of weightage, that is banking and financial services, is looking weak. If you look at Bank Nifty daily chart, then it has faced resistance near upper end of a rising channel in the last week. It formed a distribution over there at around 41,500 and has started sliding down. So 41,500 will continue to act as a resistance for Bank Nifty on the higher side. And unless that gets taken out, Bank Nifty can very well slip below 41,000 mark and head towards 40,800, 40,700 in the next few sessions. So as I mentioned, avoid aggressive long position in index-specific trades.
Right. Aggressive long positions should be avoided as we are closing in on resistance zones for both the Nifty as well as the Nifty Bank. Take your point, Gaurav. Individual stocks, what should one do? I mean, is there scope for any long positions there, or you're going short there as well?
Yeah, definitely. There can be stock-specific action in the market, and that's the reason I have picked up one on the long side and one on the short side. On the long side, I have picked up Trend. Basically, this stock was stuck in a consolidation range for last several weeks, and today we are seeing that consolidation breakout with a falling trend line breakout on the higher side, and the price breakout is being accompanied by strong volumes, which suggests that the prices are likely to sustain at higher levels. Even the daily Bollinger Bands have started expansion. So I'm expecting today's positive momentum to continue in the coming sessions. So one can buy the stock even at current level, although the stock is up by about 4%. Still, one can initiate fresh long position at current level, keeping a stop loss of 1480, and on the higher side, 1575 and 1620 will be the short-term targets to watch out for. And on the short side, as I mentioned, banking and financial services space is looking weak. So I've picked up one from that space, that is LIC Housing Finance. This stock had faced resistance near 78.6% retracement of the September decline in the last week. Over there, it had formed a shooting star, which is a bearish candlestick pattern in the last session. And today it is witnessing follow-through selling. And with that, the stock has broken its crucial daily moving averages as well as a rising trend line. So I'm expecting further selling pressure in the coming sessions. So LIC Housing Finance futures can be sold at current level with stop loss at 416 And on the downside, 390 and 380 will be the targets to watch out for.
All right, so Trent and LIC Housing are your two picks. Gaurav, thanks a lot for joining us with that quick technical check on the market. With that, it's time for another short break on the show. But when we come back, we should focus and discuss the market fundamentals.